Today is Saturday, June 11th, 2011. And the reason why I'm issuing this special report is that my research has uncovered some disturbing evidence that the markets, the financial markets, and particularly the stock markets, may be set up right now for a very significant fall in the fairly immediate future. And I want people to be aware of the risks that may very well be present right now in the markets. And you know, I'm not guaranteeing a crash or calling a crash or anything of the sort, but there does appear to be a significant technical setup which, if the right factors came together, could represent the conditions for a crash type scenario. So what we're going to do is look at the stock market charts around the world, and we're going to see that they're all pretty much set up right now to break down below major support, and if that were to happen, it could initiate a cascade of selling that could lead to some sort of a crash. So right now we're looking at the S&P 500 futures contract, and first thing we want to notice is that it's broken down from this channel from the August-September bottom. So you've got these black parallel lines, and it's broken through the bottom rail of that channel. So that uptrend is over, it's done. In addition, it broke this secondary support rail here in red, and that happened this week, which corresponded with an area of significant horizontal support as well. So it closed the week below that. It also closed below the 50-day and the 20-day moving averages, both of which have turned down, and the 20 has passed below the 50. So these are some of the very early elements of a market in transition from bull market to bear market. And I turned to cash. I got out of all my long positions right up in here around 1335, right here on that red line. And then we started building a short position, and we're short now because after the commodities crash on May 1st, I started to really look at the markets again in a new light, and my technical analysis has uncovered some features which really represent a fairly high level of risk at this time. Now, what I am looking for in the immediate future is a continuation of this downtrend. Very soon we'll be challenging the 200-day moving average here in red, and as well the March 2011 low and the April 2010 high, which are not that far away from each other. So this area is a very important key support area here in yellow, and particularly the 200-day moving average as well. It all corresponds with the uptrend from the March 2009 low. That's this lower blue rail here. So you've got major uptrend, moving average, horizontal price support from prior highs and prior lows, all converging in this area. So essentially, when and if, and I think it's only a question of when, not if, the market contacts this area, the support absolutely must hold, or will run into the potential for a very significant downdraft in the S&P 500. Now let's look at the Dow Jones World Index, and you can see that it too has broken down from its uptrend from the August-September 2010 low, as well as it has violated on a weekly basis, closing below the uptrend from the March 2009 low as well. So a couple of very significant technical failures on the world stock index. Now, immediately below where price is sitting right now, you've got your 200-day moving average, and below that you've got your April 2010 high. So this index is also coming up on some very significant support after having violated significant support recently. Now, looking at the New York World Leaders Index, you see a similar setup. This is a weekly chart now, and you can see that it's testing the 50-week moving average, which is only just a few ticks higher than the April 2010 high, and also the March 2011 low. So this is a very key support zone with a horizontal price support there, as well as the 50-week moving average, as well as the uptrend from the March 2009 low. As you can see, all converging here. So a move next week below this area would be very significant for the World Leaders Index, and a very negative indication for the immediate future for world stock prices. Looking at the BIK, which is the ETF for the BRIC countries, Brazil, Russia, India, China, we can see that it too is almost testing its 50-week moving average, also almost testing its April 2010 high, not very far away from that at all. It's already broken well below its uptrend from the 2009 lows, and so it too is challenging an extremely important support zone right now. There's a significant chance that it's going to break it this week, and how will investors react when these important support levels get challenged or broken on all of the stock markets all at the same time? Well, let's keep digging, and it actually kind of gets worse. Here's the Bovespa. This is the Brazil stock index, and you can see that the uptrend from the March 2009 low has been long since broken. And on the weekly chart, the 20-week moving average is passed below the 50-week, both of which are rolling over. Price is trading below those moving averages and sitting just above key horizontal support. You can see a number of times where this was an important low. It's also not very far from the June-July 2010 lows as well, which could easily be taken out, as well as testing the 200-week moving average on the Bovespa. Essentially, Bovespa's gone absolutely nowhere since September of 2009. So it's really been in a lateral bear market for all that time, and it looks very ready to just break down below those levels. And this is one of the sort of rising stars in the world economy. Its stock market is at the cusp of a significant failure. Russia has also broken its uptrend from the March 2009 lows. It's also sitting just barely above the April 2010 high. It's below its 20-week moving average. It also is ready to break down from very significant support. Looking at India, India is essentially in a bear market right now. This is the daily chart, so it's sitting below the 250 and 20-day moving averages, all of which have turned down and are in bear market alignment with the 200 above the 50 and the 50 above the 20. It appears to be making a head and shoulders pattern with several left shoulders ahead, and now a right shoulder and maybe a very weak second right shoulder here, and just above this neckline. So this is a chart that looks very ready to break down in a major way. Again, India is supposedly one of the rising stars of the world economy. Its stock market is in serious trouble. China, Shanghai, after plunging 78% from its high, appears to have made a 5-wave corrective move and completed it, and is now ready for its next move down. A, B, C, D, E. It broke very strongly down from that red triangle with a big red candlestick below its 20, 50, and 200-week moving averages. below all of these long-term key moving averages now, and is sitting just on top of the next level of support. And once that goes, it really has no technical support below that, and that looks like it's probably going to happen this week. So here you have all of these major indexes in the world economy ready to break down. Here is FXI, which is the China 25 Index Fund ETF, also in a similar situation. Here's the Hang Seng, which is Hong Kong, also has broken all support. It's just perched barely above its April 2010 high, and this whole band of horizontal support is perched right there, ready to break down. So China is looking very precarious on all of its three main indices. Looking at the emerging markets as a whole via the EEM ETF, we can see it's completed a 5-wave move up, and you have it now broken down below its uptrend from the March 2009 low, and also perched just barely above the 50-week moving average, and this secondary blue uptrend here. So it's another market just on the cusp of rolling over and breaking down, and also just barely above the April 2010 high as well. So you could conceivably see this breakdown below all of this support this week. Here is the big cap European stocks, and it's very much in a bear market at this time. It's trading right now at levels that were seen back in August, September of 2009. It is below all of its, this is the daily chart, so it's below all of its daily moving averages, with the 50 just about to cross below the 200 into a full-on bear market mode. It's also below this key horizontal support line, and it's closed the week below it. So it's really pretty much blown through all support at this point, and has nowhere to go but down on the European big cap stocks. Looking at the Paris CAC 40, very similar setup here. Also has, sitting on its last kind of horizontal trend line support here, already below the 50-day moving average, the 200 and the 20, all in a bear market mode, ready to break down. Look at London's FTSE, and you can see that it is already trading below its April 2010 high, and has broken its uptrend, and is just about to break below its 50-week moving average. And looking at the Sydney All Ord, this is Australia, also trading below all of its major weekly moving averages, the 20, the 50, and the 200-week moving average, and well below its April 2010 highs. You look at the TSX, the Toronto Stock Exchange, Canada, also well below its uptrend from the March 2009 lows, challenging its 50-week moving average as well. So this was once regarded one of the hottest stock markets in the world, and it's really had a serious technical failure over the last couple of months. So altogether, pretty much everything you look at across the board, with the exception possibly of gold, is ready to break down through major resistance all at the same time. When you combine this with the technicals that I'm going to show you in the second half of this report, and when you see those technicals and you realize the precarious situation of these world markets, you won't be terribly surprised if, and that's a big if, we do get a crash sometime really soon. If you want more, go to thebullbear.com. You can become a member of the BullBear Traders Room for free. No credit card is required. If you stay with me, all I ask for is a donation at the end of the month. Thanks for watching.